Let's talk about the Augusta Rule. This is one of the most misunderstood tax strategies out there. The Augusta Rule comes from Code Section 280A of the tax code. It says you can rent out your home for up to 14 days per year and the income is completely tax-free. You don't even have to report it. It's called the Augusta Rule because homeowners in Augusta, Georgia would rent out their homes during the Masters golf tournament and pocket the cash tax-free. But here's where it gets interesting for business owners. If you own a business and you own a home, you can rent your own home to your business for meetings, strategy sessions, team gatherings, or other events. Your business pays rent, deducts it as a business expense, and you receive that rental income tax-free as long as it's 14 days or fewer. Sounds amazing, right? But there are rules. Rule 1. Rent has to be at fair market value. Fair market value is what someone would actually pay to rent a comparable space in your area. The best thing to do is to document it with comparable rental rates in the area. Rule number 2. There has to be a legitimate business purpose. There needs to be actual meetings or actual events. It can't be, oh, I just worked from my couch. No, I would keep an agenda, take notes, and even photos if you can. Rule number 3. You need a written rental agreement between you and your business. Treat it like a real transaction because it is one. Rule number 4. Your business has to actually pay you. This sounds weird, but you need to write a check, make a transfer. You need to create a paper trail to show this transaction actually occurred. Rule number 5. This works best for S Corps and C Corps. If you're a sole proprietor, you're renting to yourself, this will not work. You need a separation between you and the business entity. So what does this look like in practice? Let's say you rent your home to your own S Corp for one board meeting per month at $500 per meeting. That would be 12 days, $6,000 total. Your S Corp deducts $6,000 as rent expense. You receive $6,000 tax-free, no income tax, no self-employment tax. But here's where people mess up. They have no documentation, they do it as a sole proprietor, or they rent it for 15 days and blow the whole thing up because the limit is 14 days per year. The IRS is well aware of this strategy. In fact, they even have a code section which allows for the strategy to even exist. So if you're going to do it right. Document everything, keep it reasonable, and make it legitimate. I'm Christian with SwoleTax, keeping taxes simple, clean, and stress-free.